As the U.S. markets are closed for the weekend, Tilray Brands Inc., trading under the ticker symbol TLRY on the NASDAQ, ended its last session on Friday, September 19, 2025, at a closing price of $1.21. This represented a significant intraday drop of nearly 4%, a move that might seem like just another day of volatility for a cannabis stock. However, what most retail investors watching that single-day percentage change might have missed is the subtle but crucial shift in after-hours trading, where the stock actually ticked up to $1.23. It's in these fractional movements, often overlooked, that the real story begins to unfold, hinting at a deep-seated tension between the market's prevailing pessimism and the undercurrents of strategic repositioning that could redefine Tilray's future. The common narrative surrounding Tilray, and indeed the entire cannabis sector, has long been one of hopeful disappointment, a story of immense potential perpetually stalled by regulatory hurdles and fierce competition. Investors have been conditioned to expect dramatic swings based on legislative whispers from Washington, D.C., and to see the stock primarily through the lens of a pure-play cannabis company. But the reality of Tilray today is far more complex and, frankly, more interesting. The company is aggressively transforming itself into a diversified consumer packaged goods powerhouse, where cannabis is just one, albeit significant, part of a much larger equation. While the market remains fixated on the ails of the North American cannabis market, oversupply, pricing pressure, and the slow grind of federal reform, Tilray has been quietly building a formidable beverage alcohol division. This isn't just a side project, it's a calculated strategic pivot. The acquisition of multiple craft beer and beverage brands from Anheuser-Busch, including well-known names like Shock Top and Breckenridge Brewery, has propelled Tilray into the position of the fifth largest craft brewer in the United States. This move is not merely about adding revenue streams, it's about building a robust distribution network and gaining invaluable CPG expertise that can be leveraged across all its product lines, including future THC-infused beverages the moment federal legalization occurs. This strategic depth is something the daily chart watchers often fail to appreciate, creating a significant gap between the perceived reality of a struggling cannabis stock and the actual foundation being laid for a much more resilient and diversified enterprise. Many looking at their Fidelity Investments or Robinhood app see a stock trading far below its historical highs and assume the story is over. But a closer look, perhaps through a more robust platform like Interactive Brokers, reveals a company playing the long game. Analyzing the recent stock movement reveals a narrative of intense speculative interest and underlying sector-wide pressures. In the past month, Tilray's shares have shown significant appreciation, outperforming the broader medical sector. This surge was largely fueled by renewed optimism around potential U.S. federal reclassification of marijuana. However, the daily trading patterns are fraught with volatility. The stock saw a day range between $1.20 and $1.27 in its last session, with a trading volume of over 32 million shares. While this is a healthy volume, it's considerably lower than the 30-day average of nearly 80 million shares, suggesting a slight tapering of the speculative fever that drove the stock up in late August and early September. Institutional ownership sits at a relatively low 11.97%, and while there has been a net increase in shares held by institutions in the most recent quarter, the overall sentiment remains cautious. Major players like Vanguard and Morgan Stanley hold positions, but the dominant holders are often specialized ETFs, such as the Amplify Alternative Harvest ETF, which reflects the sector-specific rather than broad market appeal of the stock. Analyst ratings paint a picture of cautious neutrality. The consensus rating is a hold, with a wide-ranging price target that underscores the uncertainty surrounding the company's future. The more bearish analysts point to the persistent lack of profitability, negative earnings per share, and the immense cash burn detailed in recent financial reports. The last earnings report for the fourth quarter of 2025, reported in late July, showed a year-over-year revenue decline, though the company did manage to post a surprise earnings per share beat. This beat was overshadowed by a staggering net income loss of over $1 billion for the fiscal year, a figure that gives any serious investor pause. Platforms like SoFi Invest might highlight the recent price momentum, but a deeper inspection reveals the financial fragility that keeps many institutional investors on the sidelines. At its core, Tilray Brands operates a global business with distinct segments. Its cannabis division includes medical and adult-use sales, with a strong presence in Canada and a growing footprint in Europe, particularly Germany, which represents a key growth market for medical cannabis. The company has been expanding its offerings in Germany, introducing new medical cannabis strains to meet patient demand, a move that strengthens its position as a leader in the European market. The wellness segment includes hemp-based foods and CBD products, capitalizing on the broader consumer trend towards health and wellness. Then there is the increasingly important beverage alcohol division. This is where the company's strategy diverges most sharply from its peers. By acquiring established craft breweries, Tilray is not only diversifying its revenue, but also building a CPG infrastructure that is ready-made for a federally legal U.S. cannabis market. This is a critical distinction. While competitors are burning cash to build brands from scratch in a crowded and fragmented market, Tilray is acquiring brands with existing consumer loyalty, distribution channels, and operational expertise. This strategy is about more than just surviving until legalization. It's about being positioned to dominate when it happens. The challenge, of course, is execution. Integrating these disparate businesses, achieving the promised cost synergies, and managing the distinct operational challenges of cannabis cultivation, pharmaceutical-grade medical products, and craft brewing is a monumental task. The company's success hinges on its ability to execute this complex, multi-pronged strategy effectively. Looking ahead, the future for Tilray is a tale of two potential paths, both entirely dependent on external factors and internal execution. The most significant catalyst remains, without a doubt, U.S. federal cannabis reform. The potential rescheduling of cannabis from Schedule I to Schedule III of the Controlled Substances Act would be a monumental development. It would eliminate the punitive 280E tax provision that has crippled the profitability of U.S.-based cannabis companies and would open the floodgates for institutional investment and access to traditional banking services. For Tilray, with its established U.S. presence through its beverage and CBD businesses, this would be a transformative event, allowing it to leverage its infrastructure and brands to enter the THC market on a massive scale. This is the scenario that drives the bull case, with some analysts projecting a potential for the stock to experience a valuation multiple expansion that could lead to significant upside. The global cannabis market is projected to grow at a compound annual growth rate of over 30% through 2030, and Tilray is one of the few companies with a truly global footprint positioned to capture a piece of that growth. The risks, however, are equally substantial. The primary risk is the very same regulatory landscape that holds the key to its potential. A failure to advance federal reform in the U.S. would leave Tilray and the entire industry in its current state of limbo. Furthermore, the company faces significant execution risk. The integration of its numerous acquisitions must yield tangible results in the form of margin expansion and a clear path to sustained profitability. Continued cash burn and an inability to turn a profit will eventually erode investor confidence, regardless of the long-term potential. Competition is another major factor. The cannabis and craft beer markets are both intensely competitive, and Tilray must innovate and effectively market its brands to maintain and grow its market share. Comment below with your thoughts on whether U.S. federal legalization will happen before 2027. In conclusion, the story of Tilray Brands is a fascinating study in expectation versus reality. The market's expectation is often tied to the short-term news cycle of the cannabis industry, a volatile, headline-driven perception of a company struggling for profitability in a challenging sector. This perception is reflected in the stock's low price and the cautious stance of many analysts. The reality, however, is a company undergoing a fundamental strategic transformation. It is building a diversified consumer goods company with a strong and growing presence in the beverage alcohol market, all while maintaining its position as a global leader in the cannabis industry. This disconnect between these two narratives presents both the opportunity and the risk. The company is laying the groundwork for a future where it is not just a cannabis company, but a major player in the broader CPG space. Whether it can successfully execute this ambitious vision remains to be seen. The path is fraught with regulatory uncertainty and intense competition. But for those investors who can see beyond the daily fluctuations and understand the strategic long game played, Tilray represents a compelling, albeit high-risk, proposition. The expectation is a struggling stock in a stalled industry. The reality is a strategic pivot that could, if successful, create a company far more valuable and resilient than its current market valuation suggests. The question is not simply whether you believe in the future of cannabis, but whether you believe in Tilray's ability to build a diversified consumer brand empire. That is the real investment thesis, and it's a far more complex and potentially rewarding one than the simple narrative that dominates the headlines. For those managing their own portfolios, whether through Schwab Intelligent Portfolios or a self-directed individual brokerage account, understanding this deeper context is essential to making an informed decision.